Good morning, America. I'm here streaming live from my office today. Thank you for watching Taxes Made Easy on smartmoneyculture.tv. And today we're going to be talking about when does a tax debt expire? How do I know when it expires? And again, how do I plan accordingly? How do I make wise decisions to make sure that I'm not paying more taxes than I have to? I had someone call me just the other day. They qualify for a great program. We can do that, but they had paid $30,000 just about 2 months prior to calling me. We could have taken care of that too. A lot of tax debt is going away. When the IRS tells you you have to do something, it depends. They're not working in your interest. So that's why getting good advice is always important. But again, we'll be right back after the break here at Taxes Made Easy. Thank you for watching. Welcome back, and thank you for watching Smart Money TV here on smartmoneyculture.tv, or watching Taxes Made Easy. Thank you if you're watching on live or on rebroadcast. And before we just dive into today's topic, do want to kind of cover the news and what's going on today. Today's February 26th in the news with the IRS. So first article I want to talk about is it's from an article from the Chicago Sun-Times talking about some of the things that you should consider this year. And again, one of the first things it talks about is the IRS is rolling out audits. And the IRS claims over and over again that they're going to only go after the rich, people making more than $400,000 a year in AGI, or adjusted gross income. But again, one of the biggest problems there is that what's in their press releases doesn't exactly match what's actually going on. And again, senior IRS representatives have flat out said there's no way for them to really look at the AGI when they do audits, and that they're not limiting it to 400,000 in practice, even though that's what's repeated time and time again in the media. So be very aware of that. You need better records than ever. You need to be prepared. They're not just going after the rich. That's again how it was sold. It's not how it's actually being put into practice. The reality is that the IRS is expanding with the IRA, Inflation Reduction Act. They're going after all taxpayers, especially business owners. So one of the big keys, and I had a question yesterday. I was at church and someone asked me about a 1099 that they received, and they received it after they had filed their return. So again, that's something that happens more often than you would think. So they get all the paperwork together, they're doing everything right, they submit their return, and then more information comes in. So what are you supposed to do about that? Easy answer: amend your return. And I told them once they process your original return, go ahead and file a 1040X, is what it's called, and you can amend your return. You can amend your return more than once too. So if something happens and you get more information, but here's what I recommend. If you're not sure, you can always go back later and amend your return. But if you get any information and you think there might be something out there, pull your transcripts. Now, the current year transcripts won't be out until probably the end of May for 2023. So file an extension, wait until May, pull your transcripts, and then you'll have all the information to make sure you're filing your tax return correctly. If you made a mistake or some information came in later, that's not a problem. Just go ahead and amend your return. Any tax preparer can do that. He asked me if TurboTax could do it. I don't know. But if it gets any more complicated, he has a pretty straightforward return, but if there's any kind of wrinkles, like I said, there are plenty of decent tax preparers, CPAs. You just need to know how to find them. Again, if you have any questions, you can always call us 520-485-7371, or contact us through guardiantaxlaw.com. Now, that's only the first concern. The second concern is that a lot of people are making things digital. So you should still get W-2s, 1099s through the mail, but if you've opted to go completely digital, especially with banks, they're going to submit financial records to you. Make sure you get everything, and it might be stuck in your email somewhere. So just everything that's filed electronically with the IRS is going to go on your transcripts, and that's what they use to go after you. So Venmo, PayPal, any kind of outside things, cash apps, any kind of sales 600 or more, they have to report. So again, this is part of it's a lot of changes in the law the last 10 years, where you have all this information is reported, the IRS sees it, and if you don't put it on your tax return, it can cause a problem. So that's why you have to be aware of what's coming in, what should you have, and that's why it's much easier to track through the year. Every time you get anything over 600, okay. And it's not one time, it's cumulative. So if you get more than 600 from a source throughout the year, then you send you a 1099. Now, one of the things to be aware of, and very aware of, is if you are making trades through stocks, or what I see all the time is people are gambling or doing Bitcoin, all the gains are reported. And a lot of people run into problems with this. Not the expenses, not the losses. So if you're gambling and you don't pay attention, we've talked about that. You've got to get that information, show your wins and losses so you can have an accurate number. People get hit with huge tax debt. I have one that I'm working on right now. We're doing an offer in compromise, and they claimed, oh, well, she had all this money. I'm like, she lost all the money too. Here's the win-loss from the casinos. Now we're moving forward to get that offer accepted. But again, be careful. Be very aware of that. So even if you don't get something paper, know what's coming on. Check your email. Make sure what's going on. And there's also a lot of adjustments with inflation. Other thing I want to touch on, I'll try to do this quickly. Again, like I mentioned, the $400,000. And so you're going to have, the IRS has no way really of looking at this $400,000 number. And there's plenty of people that, this is an AP article, quotes Jason Smith. He's the Republican chairman of the House Ways and Means Committee. It's anticipated that it will hit people making less than $75,000 as far as all of these new audits. And the IRS is really banking on this to bring in close to $100 billion more every single year. And those are their rosy numbers that they're putting out there. So it might be, depending on how aggressive they are, but it's more money out of your wallet. So the enforcement, the collections is all increasing. So be aware of that. Be aware that, look, if you're playing funny games or you have in the past, get straight. Start doing things the right way, because I hate it when people come in and they get burned and then they're a big mess and they don't know what to do. It's much, much easier to get ahead of the game. If you're not sure what you need to do or how to do it, call us. Find a professional, someone that will help you. We refer people out all the time to make sure they get the help that they need. So I'm going to pivot to does my tax debt expire? So this is really the topic that we're going to focus on today. I've talked about it, I mentioned it, but we're going to do a deep dive on it today. So really going to dig into this. So one of the first things people hear is that the IRS won't tell you your tax debt's going away. They'll just try to collect on you as much as possible. True story. I always laugh at this one. I think it's funny. This was years ago, but the same thing. It's very applicable today. Called in to the IRS. The person had owed around $25,000. $15,000 of it was expiring in a week. was set to expire, go away. And I asked him, can we set up an installment agreement on the 10,000? Ignore the 15, it's going in a wake. His first payment's not going to be for 6 weeks out. Let's just set up. And the representative on the IRS line said, no. He has to pay that 15,000 and he has to do it in a week. Like, first of all, you think he has 15,000 in his pocket? Of course he doesn't. But again, if you're going to insist that he pay this now, and that's what the gentleman insisted. I said, okay, I'll call you back in 2 weeks. And I hung up. I called back in 2 weeks, set up the payment plan on the 10,000 that wasn't ready to expire because the other 15,000 had gone away, and the IRS couldn't even see it unless they looked for it. So they have to dig in and say, okay, oh yeah, there's this debt, but it's gone away, it's expired. Doesn't even pop up on their systems anymore. So when talking about expiration dates, it's expiration dates for the states is the language they use, and there's an acronym that the IRS uses because they love acronyms. It's called CSED or CSED. So that stands for Collection Statute Expiration Date. It's not technically a statute of limitations, but it operates in a similar manner. So by law, the IRS has 10 years to collect on most debt. Now I say most debt because there are exceptions. Like I mentioned before, if you go to tax court, if you go to especially district court, if you get prosecuted, anything connected to fraud doesn't have a 10-year statute of limitations. It has a 40-year statute of limitations. And I've seen it happen where someone had tax debt that wasn't going away for 40 years. That's essentially your lifetime, or most of it. So again, there are options in dealing with it at that point, bankruptcy being one. But again, you can't wipe out everything in bankruptcy. So again, that's why I tell everybody, you never want to go down that route. You never want to deal with fraud cases. It makes everything so much nastier. So first of all, I want to talk about when does the 10 years start? So a lot of people think, oh, I filed something in 2010, it's gone, right? Not necessarily. So you got to think about, first of all, it's when is the debt assessed? It's not the tax year. So the 10 years starts running when the debt is assessed. So if you file your tax return on time, the soonest it's going to expire is April 15th of the next year. Because we always file, 23 is done, we're now filing those returns in 2024. So we're gonna continue on this. We have a short break coming up. But again, we've got a lot of information to cover on the CSED topic, federally and state. We're going to talk about it both ways, and how to make the best decisions for you and your family when it comes to tax debt expiration. Welcome back, everybody. We're talking about CSEDs, or when tax debt expires, starting specifically with the IRS. So we just broached the topic of when does tax debt start running? When does the 10 years start running? Now, just a real quick note on the fraud cases. Fraud cases normally expire 40 years after, but depending on the case, sometimes it doesn't expire at all and it just keeps going. And so, again, that's a very special case, depending on fraud, civil enforcement, or criminal penalties. And again, you don't want to go there. If you are heading that direction, you need to get help fast to prevent those penalties as much as possible. And I've seen people just plead out and take a deal, a slap on the hand, so it would close out the possibility of criminal penalties, but then they're stuck with a fraud case against them. And again, not easy to discharge. So again, the rules for fraud are very different than normal IRS tax debt. Anyway, back to collection statute expiration dates. When does a tax debt expire? First of all, when does the 10 years start running? So in our example, someone filed for 2010. If they filed that timely, they would have done it by April 15th of 2021. So what would the expiration date be? If nothing else happens, it would be April 15th of 2021. So 3 years ago, roughly. It should have already expired. Now, what if they didn't file timely? So this is, I had this example before. Someone called and they're all excited because they had gotten square with the IRS and they'd filed 23 years of tax returns. They filed these in 2019, going back to 1996. So the IRS could only go back 6 years, but because he filed all those years of returns going that far back, he was stuck. Once you put that in the mail, hopefully the IRS loses everything and they don't process those returns. But once they get and process those returns, you can't unring that bell. And I see this all the time. Biggest mistake I see other tax preparation firms do is they file taxes that aren't required, tax returns that aren't required, and all they can do is hurt taxpayers in most cases. So this gentleman filed everything going back to 1996 and 2019, and that's when the tax debt was assessed, is in 2019. So if he filed it, let's say April of 2019, when is it going to expire? April of 2029. So that was 5 years ago. He still has another 5 years to go unless that date gets put out. So I keep throwing that caveat. We'll talk about what extends out the expiration date. So if you wait 6 years, or if someone hasn't filed in 10 years, and now you've got to get straight with the IRS, they're requiring that you go back to 2018. So let's say you get good advice, you have file back to 2018, but you file that now in 2024. When is 2018 going to expire? 2034 at the soonest. So this is why it makes sense to file your returns even if you can't pay. Get that clock running. Get that started. So what if you don't file and the IRS comes in and does what's called a substitute for return or filing enforcement? The states call it, some of the states call it filing enforcement. The IRS calls it an SFR, substitute for return. So this is them coming in and saying, okay, well, you haven't filed. We have income reported on you, so we're going to file for you single and zero. We're just going to assume the worst for you and assess it to you. So let's say you didn't file in 2018, and in 2020 the IRS came in and said, look, this guy should have filed. And more likely it would have done it around 2021, 2022. So let's say in 2021 they file a substitute for return against you. That's not going to expire until 2031. What happens if you go in and then file an original return and lower the balance? That expiration date still goes back to when it was first assessed. So it's about how much time was there a debt on the books for the IRS to come after and try to collect from you. So it's like there's a time limit here for them to come and collect. And if they don't collect, or they're not able to within that 10-year period, it's gone for most debt. It just goes away. Now, it used to be you could file to extend that time period out. Now, IRS used to use this to intimidate people, and they used and abused this. And so Congress got together and they said, no more. There are rare times it might help somebody, but in most cases the IRS used it and abused it and hurt a lot of people. Basically, people that didn't understand what they were doing, they didn't understand that they had a right to have this stuff expire, and so the IRS would have people extend stuff out all the time that they didn't need to, or they qualified for a hardship status or something like that. And that's the value of a hardship status, is you're kicking the can down the road and you're going to say, hey, I can't afford to pay. Give me a 2-year break. But the 2 years gets you that 2 years closer to that expiration date. And if the debt is going away soon, hands off. It just expires. So the last 6 months of every case, and it's more like a year, depends on the case. But if your tax debt is going away in less than a year, the IRS usually tends to shelve it, especially in the last 6 months, and that's in the IRM, their Internal Revenue Manual. And then it just sits there and goes away. So what happens if, let's say someone files it, let's say they file their 2020 return. They do it timely, so they file in 2021. But then they get audited. So let's say in 2024, they get audited. So let's say they didn't owe anything when they filed their return. And then they get audited in 2024, and the IRS comes back and says, oh, now you owe us $20,000. When does that 10-year start running? When the IRS knows that there's a liability and they can start coming after you. So it would start running in 2024. Soonest expiration date would be 2034. So that's why audits are so nasty. It's creating a new debt, and the IRS has 10 years from when it's assessed or finalized to come and collect from you. Now, let's say you filed your return and you owe $10,000. And that clock starts running as soon as you file your return. We'll stick with 2020, you filed it in 21. That 10 years starts running in 2021. So on the 10,000, the IRS can only collect on that until 2031. Let's say they come back in 2024, they do an audit and said, hey, you owe us $20,000 more. On that increase, when the increase happens, that 10 years doesn't start all over again, but on the 20,000, then they'll have until 2034. But on the first 10,000, they only have it until 2031. So it gets a little crazy here, but just think about it. Whenever a new debt is assessed on the same year, you have the 2010 that was assessed in 2021, and that's already sat there for 3 years. They've already had 3 years to collect on that. And then there's an audit that increases the tax by $20,000. On this other $20,000, though, the IRS hasn't had any time to collect on that. So then it's 10 years from when that is assessed. So you can have multiple CSEDs in the same year. And the IRS is not good at making sure the CSEDs run properly. I've seen plenty of mistakes. I've seen plenty of times where part of it should have run and they don't have it fall off. I've seen other mistakes here where, again, the IRS used to be much clearer about the CSEDs, and when things are getting ready to expire, it used to be they would give you a date certain, and you could rely on that. Now, whatever dates they give you aren't as reliable, and so I have to be, with our clients and with taxpayers, we have to be a lot more cautious to make sure that it has run, that it has confirmed that it's run, and that the debt has expired before we move forward with other resolutions. So again, just word to the wise, another change in service by the IRS, that they're recalculating the CSEDs. They're not putting those numbers out and giving you the exact numbers beforehand. It used to be when you had a CSED date, it was pretty much a done deal. That's when it would run unless something happened in the meantime. So when you call the IRS and you get your list, on a compliance check, you get a list of what's happening. One of the first things you should be asking is, when is the CSED on these tax debts? Now, if I have brand new debt in the last, from like 22, 23, or 2021, 22, 23, am I asking about the CSEDs? No, because I know they've just started. We've got a long time. But anything older, you can always ask for the CSED dates, and they'll give them to you. The problem is now you have to have some wiggle room. The IRS will reevaluate, and sometimes they're wrong when they do their reevaluations. I have absolutely seen that, and it's mattered to our clients to the tune of one case it was around $50,000 that I had to get in there and fight for an appeal, and it took about a year of fighting with them to finally get them to acknowledge their mistake and to get my client paid. So anyway, be very aware of that. That's why I said, make sure currently changing tactics. You have to be more cautious with when those expire. What other things can cause? Anytime a new debt is assessed, notice of deficiency, under reporting, if you amend a return, anytime any new debt is increased, for that new debt, it will have its own expiration date of when it expires. And so be very aware of that, aware of when a debt is assessed. And it matters for other things rather than just expiration. So I've mentioned a few times that I've thrown in qualifying language. It should expire at 10 years unless something happens. What are some of the things that can extend out of debt? So let's say you file in 2021. That's all that happens. You owe $10,000. What are some of the things that can take that 10 years and stretch it out? Just think of it as a timeout. Anytime the IRS, you say, hey, I'm doing something else, you can't collect. Anytime the IRS can't come after you in that 10 years, more time is tacked on so that the IRS gets 10 years to come after you. So just want to list some of the things here. Number one, bankruptcy. If you file for bankruptcy, successful or not, that extends out the time period. Now, one of the big questions I get is, can tax debt be wiped out in bankruptcy? Yes, it can. It has to be old enough. So I see cases all the time where someone has gone in, filed for bankruptcy, and because their tax debt isn't old enough, it's not discharged in bankruptcy. So you still have to deal with it. And while you were in bankruptcy, that extends out the time period plus 6 months. So sometimes, and the IRS isn't always good at making sure that bankruptcy hold comes off of a case. Yeah, they're not coming after you, but at the same time, you can't resolve the case while there's a bankruptcy hold on it. You can't do anything with it. So there's times I've had to dive into the IRS, get that bankruptcy hold off, so we can then resolve the case and give the client peace of mind. If you live abroad for more than 6 months, so that's another time period where the IRS can't come after you. Military deferment, if you're in a combat zone, when the IRS legally can't go after you. Any kind of appeal process, so if you do a CDP hearing, filing for tax court, anytime that the IRS is like, okay, hands off, we're going to appeals, we're going to a judicial review, so in the taxpayer assistance order, even asking for an installment agreement. And I have seen this in a really nasty way where the clients didn't ask for an installment agreement, or they swore up and down they didn't. And we had a CSED running about $400,000 going away in just a couple months. Maybe this is July when I spoke to the revenue officer. September of October, this huge chunk of money was supposed to fall off. So I was like, okay, we'll just kind of ride this boat, wait for this to fall off, and then set up a negotiation with them. They don't like it, but what can they do? They're limited in what they can do over a brief time. So I called, asked the revenue officer about the CSEDs, got the CSEDs, but this is where he was being a little disingenuous or lying to me. He had put a hold on the case. A week before hiring me, the taxpayers talked to the revenue officer. This is where not knowing what you can do, what your rights are and how things are supposed to happen can really hurt you. So the revenue officer told me what the CSEDs were when those were not accurate because they were currently being extended out. He claimed they asked for an installment agreement. They said they did no such thing. So he put in a hold on the case because they asked for an installment agreement. There were no financials. There was nothing really to consider for an installment agreement, but he was using this trick to extend out what was going to expire in just about 2 months. Yeah. And when I spoke to him, he didn't mention anything like that. He represented to me that that was the expiration date. It was only later when they want us to reconfirm, and I call them back, and I'd never had this happen to me before. I've never had someone be hide the ball or be that dishonest with me. So when I called up and like, look, this is going away. Let's see what we can do on the balance of this. He told me, oh, well, it's not expiring. But he didn't tell me that until I specifically asked for it. I said, what are you talking about? It's not expiring. And he said, well, I put a hold on it, do this installment agreement. I'm like, I never requested an installment agreement. And he's like, well, they did a week before they hired you. And he put it in their notes. So this is why you have to be very careful when dealing with complicated cases. This is a case in the millions of dollars. It was over $1 million. And they were talking to the revenue officer and gave him ammunition to claim, oh, well, they asked for this before they hired representation. He didn't let anybody know he was extending out the statute. And it took another 2 to 3 months afterwards for it to finally expire, because when we finally figured it out, I had to appeal to his manager and regional manager and raise some holy hell, excuse my language, but to get them to take the hold off. The clients were furious. They were upset that he was able to play that game. And I read him the riot act, but it didn't do us a lot of good, because in the end, the taxpayers weren't doing what they were supposed to on the balance. So yes, that $400,000 went away, but they still had a good $600,000 to deal with, and they didn't deal with it. So again, use any delay you have wisely. Make sure that you're not extending things out. So an innocent spouse application. So if you ask for innocent spouse relief, again, puts a hold on their collection actions. Make sure you actually qualify for these before you apply for them. Too many people apply for these thinking, hey, I think I can. This all you're doing is extending out how long the IRS has to collect from you. And the last one, this is a biggie. This happens all the time. People file offer and compromises that aren't successful. They either do it on their own, or they go and they go somewhere else, and someone doesn't really know what they're doing, and they file offers. And I see this all the time, where someone has filed 2, 3 offers. One of the most frustrating things is people hire someone like, look, I'm in the middle of an offer. I filed it. Didn't know what I was doing. Can you fix it in the middle of the offer? We do it, but it's a pain. It's to jump in right in after who knows what was. We don't know what the initial documents were, what the basis was. We've saved some like that, but again, it's so much harder. We've had plenty where they just didn't qualify in the first place, but they submitted an offer anyway. So then we have to deal with the damage and try to save it afterwards. We're coming up on a break in just a couple seconds, but we're going to continue on talking about in a second. Welcome back, everybody. I kind of ran up against that break a little bit. So again, talking about CSEDs and offer and compromise. This is a big one where people file multiple offers, not knowing if they've truly qualified or not. And so again, if you can submit multiple offers, it's well within your rights to do so. It can be a big problem though. If you submit too many offers, you can be labeled a frivolous filer. And that you're just trying to kick out the CSED every single time by filing one offer after another. You don't want that designation, because essentially they ignore your offers after that point. And another problem is when you file you're just filing the file, you're extending out when that tax debt expires. So every time it takes them roughly 6 months to consider an offer, or another few months just to, if you have appeal rights, etc. So it kicks it out 6 to 9 months every single time you do it. If you have less than 2 years before your tax debt expires, I almost never suggest an offer in compromise unless someone has to get rid of their debt right away. It makes a lot more sense to go into a hardship status for 2 years and just let the tax debt drop off. It's easier to do, it's less expensive, and it usually should be about a third to 50% cheaper than doing an offer. And it's a much more guaranteed route of making sure things happen, because things happen in an offer. People get surprised, people get money they didn't expect, etc. It's much easier to put someone in a hardship status with the IRS. So big concern here is make sure someone gives you all your options and they look at it. And so ironically, well, not ironically, the closer your debt is to expiring, the easier it is to qualify for an offer in compromise, because the IRS takes a 10-year look at when that debt is expiring and can you pay off your debt by then. And if you, let's say you have if you have a 2015 debt that's going away in 2026, there's only 2 years to pay. But you have some 2023 debt that is going to stick around for 2033. If you can't pay all of it, if you can't pay the older debt that's going away in 2026 before it expires, the IRS has to accept your offer. Not only on the newer debt, but on the older debt too. So it can absolutely help you to understand how this works and how to use it in different resolutions. You can do a partial pay installment agreement. Some people, they don't qualify for a hardship status, but we can set them up for $500, $1,000 a month. And especially on higher balances, if that tax debt is going away in a couple of years, we set them up on a payment plan on what shows they can afford to pay, and then the rest falls off. And that might be a much better resolution, save you money and heartache, to give you that peace of mind. And here's the funny thing, a lot of people trying to purchase homes, you can get on a partial pay installment agreement, which is you go in and say, look, I can't pay the full amount of this over 7 years, but this is what I can afford to pay. And you have to prove it up. But once you get in that installment agreement, it can give you a lot of peace of mind moving forward. And it doesn't matter if that tax debt is going away or whatever. I've set people up on installment agreements for $200 on $50,000 to $100,000 of debt, where the IRS wanted $700 to $1,000 a month or $1,200 a month. But because we showed they can only pay $200, they get on that installment agreement, and then they can go purchase a home and improve their situation and their tax situation. So a lot of different ways that understanding CSEDs can help you. So if you have more questions regarding the CSEDs and the IRS CSED, where should you go? The IRM. So again, I'm going to share my screen. I'm going to pull up a new. So I'm going to share my screen again real quick. And there we go. So you go directly to the IRS website. In the search button, you just type in IRM, stands for Internal Revenue Manual. Click on that. You almost always want to be in Part 5. There's criminal investigation, there's appeals, taxpayer advocate, penalty and interest. But as far as collections, you almost want to be in the collection process. Okay, sometimes it doesn't want to load right, so you just reload the page. There we go. So 5.1, field collecting processes. This is where you're going to get a lot of your information. Right here, 5.1.19, Collection Statute Expiration. It goes into it in detail, more detail than you want. If you keep going down, here's your financial analysis and on the offer and compromise. And this walks through the financial analysis, really is the heart of what you're going at. But if you don't think the IRS is doing it right, you go to the IRM, you find the relevant section, and then you can quote that to the IRS. And when you can quote their regulations back to them, that's the way to win arguments with the IRS, if they'll listen. If they don't listen, that's when you appeal and say, look, you're not following your own rules. Just make sure you're understanding the rules right. So I'm going to pivot and talk about the states. So I spent a lot of time talking about the IRS because a lot of the rules carry over and they're the same for the states. So if the states go in and file for you, the expiration date runs when that tax debt starts. So let's say that the states come in and they file a tax, they do a substitute for return or filing enforcement. They say, look, you owe $20,000. And you go in and file an original return and lower that $20,000 down to $5,000. When does that statute start running though? Does it restart once you lower the balance? No. It still goes back to when the original debt was assessed. Because you decreased it, you didn't increase it. So again, they had time to collect that $5,000 going all the way back to when the tax debt was assessed. It continues to go. Rule of thumb, most state tax debt goes away in 20 years, not 10. I don't have a single state where their tax debt becomes unenforceable, and that's the correct term, sooner than 20 years. If you ask the state, when is my tax debt going to expire, they don't like to give you a particular date. They'll tell you when a date was tax debt was assessed, but they don't like to tell you, hey, on July 14th of 2024, $10,000 is expiring. You can get that information from the IRS. It's a lot harder to get that information from the states. Can state debt expire? Yes. Have I seen it? Absolutely. It's a lot harder to work with though, because the states have a lot more exceptions as to when things will expire, when things got assessed. So this is why I generally recommend, if you have IRS and state debt, pay off the state first in almost all cases. Set up a payment plan with them, get on something and use that monthly payment plan to help you qualify for a better resolution with the IRS where you have more debt. And again, most cases. Can the states go beyond 20 years? Absolutely. They can go in and file another tax lien. So the original tax lien is good for 20 years, and then, 10 years, but they automatically file at the end of the 10 years to extend it out to 20. That almost always happens. And then after the 20 years, they can go back and extend it another 10 years. So if you have a larger debt, if you're on their radar, if it's been a problem case and you've been fighting them a lot, they can absolutely go in and file for another 10 years. Now, can they go beyond that? Technically, yes. There's no limit to how long this tax debt can go out. There are some states, I believe Michigan's one of them, there's no limitation. Their tax debt does not expire. It's just not in their rules. Now, again, these are local laws governing local state debt. So again, not everybody has a 20-year limit. Some of them are 30 years to start. Some don't even expire. So I say it's the Wild West because you have to reach out. Each state is different. New York and California is 20 years. The larger states have more defined rules. And once that 20 years runs, their debts do fall off. But I've had plenty of cases where we were dealing with tax debt that was over 20 years. Tax debt wasn't filed timely, it wasn't assessed correctly, or if it's a special kind of tax debt. We see that all the time where we're dealing with tax debt. And it's not often, but we see, I think just this last week I was talking to someone who owed from the 1990s, still, late 1990s. But the early 2000s is very common when you're dealing with the states. So again, be aware of that. When you're dealing with the states, if your tax debt is much older, you can, if the state allows for a hardship plan, California does, New York doesn't, other states do, but you can get in that hardship program and let that expire. Now it's usually 1 year at most with the states. And so you have to renew it every single year until that tax debt expires. I've done it plenty of times, but again, it's a much more difficult proposition than working with the IRS. Now, again, if they won't give you the dates, most of them won't. You go off the date of assessments. You ask your clients, have you filed for bankruptcy? Have you lived outside the IRS? Ask them some of these qualifying times, and then you kind of have to guesstimate when is it going to go away. There are times that you can get that information, but again, they don't like to give it, and it just automatically happens in their system. Just to wrap up in the last minutes we have, if something was supposed to expire and didn't, what can you do? You can appeal it. This is a good reason to go to Taxpayer Advocate, go to file a CAP appeal with the IRS and say, look, you're not doing this right. You're not following your own rules. This should have been done correctly, and this is why I believe you're wrong. And then you can get in there and talk to someone or communicate with someone that actually has the authority to adjust these things. Revenue officers can make adjustments to correct these issues. They don't like to, but again, normally you're not talking to the person that has the authority to move CSEDs, especially if you're talking to collections. It has to go above and beyond. And so that's one of the concerns when the IRS isn't following their rules, or they just change. And that's the problem in the last, with this administration, is that a lot of times as they get closer, they'll recalculate the CSEDs as they get ready to expire. So as they get ready to expire, or they just expired, you might want to call and say, hey, has it expired? What's going on? Now, another way, you don't have to call them. If you're on irs.gov or you have a tax professional, you can always pull the transcripts. And it shows on the transcripts if the debt has been written off. So at the top of the transcript, it'll tell you the current balance with penalties and interest. And if it says 00, where you had a debt, you go down at the bottom of the transcript and it tells you what happens. And if it tells you the debt has been written off, you're fine. I mean, the debt might have been paid off for some other reason, but most of the time, the transcripts would tell the tale of what's going on with your case. And that's what I pull up for proof. So I want to wrap up with a true story on transcripts. So I had this case where there was a fraud issue. They had about $400,000. No, I think it was not $250,000 debt that had gone to the DOJ. Again, everything gone wrong. They went to tax court, didn't agree. They went to the district court, and she finally agreed to settle. But again, I think she got some very, very bad advice to end up where she did. And we were actually working with the DOJ on the case. We didn't want to fight it out in court because it was a legitimate debt. And she lost a lot of rights by going to the DOJ. She didn't qualify for an offer anymore. She didn't qualify for a home exemption. But I kind of begged and pleaded, negotiated, sweet talked the gal at the DOJ into putting her into a hardship status, but the DOJ really doesn't have a hardship status. It got shelved more than anything else. The interesting thing is, though, that was for 2021. She had tax debt for 2002, 3, 4, and 5 that had added up to another $400,000. And that was the majority of her debt. This entire time that she was in court, tax court, district court, DOJ had extended out the CSEDs. So the moment we got her older debt shelved with the DOJ, as soon as that case was wrapped up and the DOJ hold came off the case, I called the IRS to see what was going on with everything else. And it had expired because it had hit the 10 year, during this time period, it had hit the 10 years, but it was still sitting there until it expired. I called the client up. It was April Fool's Day. She didn't believe us. She got mad at us because she thought we were playing a joke on her, which we would never do. But I had already pulled the transcript, highlighted where it said it was expired, and sent to him. She ended up crying. because this huge weight had been lifted off. So call us, or I'm out of time, but we'll talk tomorrow.